Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we had the pleasure of interviewing Don Durrett of goldstockdata.com. How you doing today, Don?
Pretty good. You pronounced my name correctly. Excellent.
Yes. I'm glad. It just rolls off the tongue well. So I want to get your perspective on the gold and silver price action that has been happening. So obviously, I know that you're in it for the long game, but some people may be looking at, this recent performance. Silver ran up to about close to $90, and then it came down. It's sitting at around $77 as such. Gold ran up to about close to 4,800, and then it sold off to about 45, 42. And such. And so is this just noise? Do you look at these kind of patterns in the charts, or what's kind of your assessment of this?
Yeah, I'm glad you started here. Let's start with silver. Can you bring the silver chart back? So one of the things is that I'm a speculator. I don't really care about the near term. I don't really care about the next 12 months. I'm always looking out on the horizon because I'm looking for big alpha. And so for me, it's all about entry. It's all for this near term. I'm not thinking about selling. I'm only thinking about buying. So I'm always thinking about opportunity. And so I'm always thinking about, okay, when's the next correction? So a lot of people, I'm always talking about the floor. What is the floor? What can we expect next? And people think I'm bearish. They call me the most bearish bull. So if you look at this chart, any chance you can put the 200-day moving average in there? Can you add the 200?
Yeah, let me see if I got that.
All right, so you can see that we almost touched it very recently, but we didn't. And so that 200-day moving average is at 64. And I think we could very well go down and touch that. Now, at some point this year, might not be in the next week, but it could be in the next month or sometime this year. I think there's a chance we could go down and touch it. So I would say that the chance of going much below that is pretty low. So right now I have a floor of 58 and a range of 58 to 68. And so basically I'm just giving myself some room below that 200-day moving average. I don't think we're going to 55. We're probably not even going to go to 60. But so right now my range is 58 to 68, and it's basically based on that 200-day moving average and then what we've done. And I've basically been telling people to look out for 64, because 64 is the 200-day moving average. Kind of think in the back of your mind that we could definitely go back and retrace that. So when we ran up to 90, I basically said, not so fast. Don't expect this thing to break out because the war, unless the war's over, then if the war ends quickly, then yeah, we're probably going to run to a new all-time high in June or July. But the war isn't over yet. So as long as that war is still going on, think we could go either direction. So my bottom line is this, is that I still think that we're going to see lower prices in silver at some point this year. I actually have an open order for SILJ at 27, and it was at 34. And today it's all the way down to 30. I mean, one day it closed that gap by half. And if we go down, we're not going to bring up the SILJ chart, but if you look at that chart, I think 27 is in play here. Just like in this chart, I think 70 looks like it's in play. And if we go to 70, which is about a 10% drop from here, SILJ should fill. And so I'm expecting to go lower, but I remain uber bullish over the next 2 to 3 years. I think that gold is in a bull market, and silver both, and that we're going higher over the next 2 to 3 years. In other words, gold and silver are the buy the dips assets, and I think that the stock market is not in a bull market. I think it's basically these are just dead cat bounces each time. Even though we're having an all-time high, I really feel that the stock market isn't in what Michael Oliver calls a topping process. That we're maybe, if the war ends in the next couple of weeks, which we'll talk about that, I think we could go to 7,800, 8,000. But it's a melt up. It's a final. It's basically a final rally. The bull market and the stock market, in my opinion, is over. People that are buying now are basically buying, falling knife situation. I think people are going to get hurt in the stock market. And gold, now, if we look at the gold chart, you'll see that we went down and we came really close to touching it. I don't think we touched it. It looks like we touched it there in January. Okay, so using this same line, I think that 4,200 to 4,400, so 43, 42 is the 200-day moving average. That's definitely in play here. And my range is 4,200 to 4,400. That'll be the next cycle low, is my expectations. Also, I want to mention that this is all about gold, not about silver. It has nothing to do with silver. That's why gold was at $90, a couple days ago, 87. I didn't even know it got to 90, 87. And it's all the way down to 77. But the reason why is because of gold. Look at that gold bar right there, that red bar right there. Gold's down $100 today. So gold's the big dog, and we've had 4 down days in a row in gold. And silver couldn't withstand that. If you had 4 green bars, silver would be over $90 right now. This story is all about gold. The reason why is central banks don't buy silver, except for Russia, but central banks buy gold, and they're buying about 25% of the supply. And gold is a much larger overall market than silver is, and so gold is the big dog. I call gold big brother and silver little sis. And the reason why is because little sis is silver is feminine. It's ruled by the moon. You can't understand her. So silver's feminine, so I call her little sis. And I call gold big brother just to make a pair there. And big brother's going to lead, and little sis is going to hang back. And when little sis sees the coast is clear, she comes running. And then and big brother says, wait, slow down, and she backs off. But this is all about gold, and I think that gold is going a lot higher. These are buy the dip opportunities. We're at 4,500 here in gold. We might go to 43. We might go to 42. It's just buy the dip opportunity. But bottom line is, I feel strongly gold's going higher, a lot higher. I think that 7,000 is definitely in play. We're probably going to 8,000 or higher. I don't think that Egon von Geiritz, I'm mispronouncing his name, he says his target is 17,000 in gold. I actually don't think that's crazy talk. And so I think that 7, 8, 10,000 are in play here. And 7,000, in my opinion, is kind of a fait accompli. I don't see a path where we don't go to 7. The key here for gold and silver investors is getting to 7 and staying there. You don't want to run up to 7 and then crash all the way back down to 5. You want to go to 7 and stay there. If we go to 7 and stay there, the leverage is unbelievable. It's almost crazy how much leverage there is in the miners if you get that outcome.
Yeah, for sure. Okay, so I want to get your thoughts on this chart here. This has been floating around, and this is China's net imports of silver tons. It's the most in 20 years, over 20 years.
Yeah, it's pretty intense. Also, in tandem with this chart, they lowered their exports. China is the number one country of exporting silver. They lowered their exports too. They lowered them by about 25 to 30% this year. So they're importing more and they're exporting less. And the reason why they're the number one exporter as a country, I think I'm right about that, is because they refine so much silver. So a lot of these countries, Peru, Mexico, they send their ore to China, and China refines it. They refine it and they turn around and send it back out. So now they're pulling all this silver in all over the world, refining it and keeping it for themselves, and then importing more. And so, but again, the story's all about gold. This is just kind of add-on information that shows you that silver will outperform gold when gold runs. But silver's not going to run on its own, even though you have these big imports from both China and India, and even Russia central government buying silver now. And then the COMEX their overall inventory has been shrinking. LBMA's has been shrinking. So you have these inventory issues. That just means that if gold does trend to 7,000, silver will outperform gold by 2 to 1 is my expectation.
Okay. Gotcha. So silver still has a lot of legs to run. So you mentioned that, gold at 17,000 you don't think is a far-fetched call at all. I mean, Pierre Lassonde even calling for $17,000 gold and such. Where do you see silver at in that scenario?
So I like to use Michael Oliver's. He uses, instead of using the GSR, he uses the SGR, silver to gold ratio, because the math is real easy. If you use SGR, it's basically percentages, 1%, 2%, 3%. So if you get to, let's use 8,000 since it's a round number. So if we use not completely round, but more even than 7. So if you use $8,000, if you go all the way to $8,000 gold, if you use 1%, it would be 880, excuse me. If you use 2%, it would be 160. If you use 3%, it would be 240. And it was 3% in 2011. So 1% is very conservative. So right now, we're at 4,500. So if you use 1%, it would be 45. If you use 2%, it would be 90. So 2% is definitely in play here. So if you get to 8,000, 2% is 160. If you use 7,000, 2% is 150. So I think that we're going above 2%. So if you go all the way if you go to 10,000 and you go to 2%, it's 200. You use 3%, it's 300. Now, if you go to 5%, you go to 500. Now, Michael Oliver thinks that we can go to 300 to 500, which to me, that's pretty uber aggressive, if you will, it's possible. I think 300 could be in play here. But 500 to me seems a little aggressive. I'm not expecting 500, but I think using these numbers, I think that if you go somewhere between 2 and 3%, you're somewhere between 150 and 200 at $7,000 gold. Mm-hmm. So I think that 150 to 200 is definitely the number where you should focus. I think that is, if you're going to value gold and silver miners, I think that $7,000 gold, $200 silver absolutely makes sense. And that's what I use right now. And I think it's actually conservative. I think there's a very good chance we could go to $8,000 gold and 250 silver, 300 silver. But I don't use those numbers because those are aggressive. So I'm actually using conservative numbers. And these miners have just crazy upside at those levels. And if you go beyond it, if we get into a mania stage, I think that we could easily, exceed my conservative targets.
Yeah.
We got all of the boxes ticked, and now we have one of the only shovel-ready permitted projects in the US.
It'll be Wyoming's first permitted mine, is this correct?
It'll be the first one in 100 years. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
So getting to that mania stage, I'm curious in how much this next screen I'm going to show you how much do you think this has to play with the movement that you're expecting in gold and silver? So this is how government debt has diverged across major economies from 2005 to 2025. And it shows that public debt, world debt, have increased from 68% to 95% as a percentage of GDP. The U.S. went from 66% to 125% within the last 20 years. You see multiple nations on here that are just significantly increasing their debt to GDP percentage. And so, curious how much this plays into your outlook.
This is my thesis, literally. My thesis is that the debt bubble will become basically, it will pop, that it will no longer, you need to, once the debt gets beyond a certain size, it becomes a doom loop where you're pushing on a string. And Japan has kind of reached that level. You can see Japan over 200%. Once you get to a certain point, it's really difficult to grow the economy because you're just servicing too much debt. And so, debt becomes too big of a portion. Like right now, the U.S. government, we have $7 trillion that we're spending. And of that $7 trillion, $1 trillion is just interest. And we're only raising $5 trillion. So of the $5 trillion that we're raising, 20% of it is going to interest. So that's your doom loop, is like once the debt gets too big, you're in a doom loop situation. For instance, we're already at $1 trillion in interest, and it's probably going to be higher than that because interest rates are going up right now as we speak. The 10-year today went to 4.6. 4.6. We haven't been at 4.6 in a while. And the 30 years over 5. And so they can't borrow at the long end. They can't borrow that at those rates. So those bonds are off the table. We can't borrow. We can't pay those back with 4%. So we can only borrow at the short end, right? And so if you're borrowing at the short end, you have to keep rolling them over. And that becomes a big problem. So this year we have to borrow $10 trillion. Now only $2 trillion gets added on because when we borrow money, we consider that an asset. And so it's on our book as an asset. And so when we go to pay it off, it doesn't expand the debt. But guess what? You have to raise the money. You have to borrow $2 billion more. But on the balance sheet, it looks like you did nothing. But you did suck out $2 trillion or whatever, at $8 trillion actually. So they have to roll over $8 trillion. So that $8 trillion, they have to suck that out of the marketplace. They have to go out there and borrow it, and then they pay off somebody. So basically, what they do is they borrow the money and they pay it off. They pay the person off. So it seems like it's a nothing burger, but it depends on where you're getting that money from. If you're getting it from private investors, it's a wash because you're getting it from private investors and you're maybe giving it back to private investors, right? So it's a bit of a wash. But if you're printing it, it's not a wash. And so that's the problem. That was the reason why Hank Paulson had that interview 2 weeks ago where he said, we need to have a plan in place if there isn't any buyers for our debt because it'll create inflation. And that's where if you're borrowing $10 trillion and there's no buyers and you have to print the money, then you're going to create inflation. That's when the doom loop really kicks into gear. And that's my thesis. The reason why I own gold and silver mining stocks is because I believe that eventually you get into a doom loop and you can't get out. And I think we're there right now. I really do. I don't think that, because what happens when debt gets to these levels is you get into a situation where you have to start managing the economy. And I'm starting to hear more and more voices out there that are saying that the Treasury and the Fed are no longer managing inflation. Inflation is basically an afterthought. Instead, what they're doing is they're managing growth. Because they have to have growth. If you don't have, it's grow or die. We're in a grow or die economy. They're literally managing growth, and there's free people out there talking about it. But that's what happens when you get into a doom loop. You get into a doom loop, and you can't. And this is why Janet Yellen said we're not going to have a financial crisis in my lifetime, because the thesis out there right now is that as long as you inject liquidity, you can prevent a crisis. The only thing that creates a crisis is the lack of liquidity. But the kryptonite for that is inflation. If inflation gets too high, and now inflation's over 4%, we're back to 4% inflation. And once you get to 5%, you're in a Katie bar the door situation. Because if you get to 5% and you print money, are you crazy? Then you're going to get 8% and then 10%, and then you destroy the currency, you destroy the economy. So people have been worried about these high rates. Like if you get the 10-year to 5%, then you have a problem. But the real issue here, the big problem is inflation. So you have all of these balls in the air that you're juggling. So you have the 5% 10-year. It's interesting. My favorite number, 5. I'm a 5 of diamonds. And if you get 5% inflation, you got a big problem. And so basically you have all these balls in the air, and then you have passive investing. Passive investing creates instability because there's nobody on the other side. If passive wants to get out, there's nobody on the other side. There's nobody to sell to. You could go down 1987 event really easy. You could go down 20% in a single day if the passive people try to get out, because there's nobody on the other side of the trade. And so there's all these balls in the air that the Fed is trying to juggle. And like I said, this is my thesis. My thesis is that once debt gets to a certain level, you get into a doom loop and there's no way out. And eventually the market figures it out. And once the market figures it out, everybody heads to the sideline. So we're waiting for a trigger, right? We're waiting for the top of the stock market. We don't know what it is. But ultimately, something happens. Lehman Brothers, Bear Stearns, right? Something happens and people lose their confidence, and everybody heads to the sidelines. It's the old Jim Rogers thesis. The business cycle did not leave. It did not go away. It's still there. It's still there. It's the boogeyman. The business cycle is the boogeyman, and you can't prevent recessions. You can't. And so it's the boogeyman waiting, it's waiting for the rug pull's coming. You just win. The only question is when. And the thing is that I've been saying that we will not recover from this one. This particular recession that we're heading into is basically an end game thing. In my opinion, we won't recover. What I mean by that is that they will have to do a financial reset to reset the economy. It's going to be very similar to Japan in 1989. They had a lost decade because they couldn't restart it. Well, it's going to be the same situation in the U.S. However, our debt bubble, right? If you can't restart it, you got to do a reset of some type. In other words, the reset is going to be necessary to pay down the debt. So they're going to rug pull everyone. And they basically have shown a willingness to do this already in the K economy, right? The K-shaped economy, the middle class is just keeps getting hammered, and they don't care. And the top 10% keep doing fine, and they don't care. They just keep doing it and doing it and doing it. Well, the reset, guess who gets smacked in the face in the reset? The middle class and the lower class. The top 10% is like no big deal because they can afford it. And it's the same thing. And so that's why the reset is going to be so attractive. Because that's what they're doing already. Oh, we're going to smack the middle class in the face. Oh, we've been doing that for 30 years. No big deal.
Yeah, it's gonna be cause a lot of issues, and I mean, especially with populism and things of that nature. So looking at this chart, M2 money supply continues to go up. If I'm looking at the last year's continuous could trend up. So in the event of a crisis, a debt crisis, a crash or whatnot, I imagine this chart's going to go parabolic.
Well, that's right. That's the 5% inflation problem.
Yeah.
If once you're at 5%, that chart, no, it doesn't go straight up. It goes sideways, or they can't print. Once you get to 5%, it's going to be really hard to maintain this. Once you get to 5% inflation, it's going to be really hard, because if they do that, they're just going to they destroy the currency, destroy the economy. The one thing about it is that these people are smart. They know what they're doing. They know the outcome. How many PhD economists does the Fed have? Like 100. They know the outcome. You can't do it. It's not a choice. It's not you can only print when you can print, kind of thing. There's a limit. Okay. So I wanted to go back to what you just said. I wanted to mention something about inflation, about who gets hurt. Right now, solving the inflation problem is easy. You stop printing money. It's easy. Inflation is a monetary event. It's all about money printing. You want to create it. They're afraid of deflation. They don't care about inflation. They say that their inflation target is 2%. BS. They could have 2% in 6 months if they wanted it. Inflation is easy to solve. You stop printing money. It's not that difficult. It really isn't. The problem is, if you stop printing, you get a recession. Like I said, and guess who gets hurt when there's inflation? Right? It's the middle class and the lower class. The upper class, no big deal. A little bit of inflation, I can afford it. Oh, grocery prices went up. So what? Right? So my point is that they don't care about inflation, so they're going to run it hot because they care. They don't. If they really cared about it, they would have solved it already. They had lots of time. They had lots and lots and lots of time to take it down to 2%. And all they had to do was stop printing money. No. But here's the irony of ironies, is that the Fed, this cracks me up. It's hilarious, because this is where they're basically politicians, but they're on the sly. The Fed will never tell you that money printing causes inflation. Go back and read the transcripts. The Fed will not say, and my goodness, it's economics 101. Thank goodness Powell isn't an economist, so he has an out to basically be in denial. But they will not say that money printing, quantitative easing causes inflation. Quantitative easing doesn't cause inflation. Money printing doesn't cause inflation. They all say this. BS. It's the size of the money supply that causes inflation. But you won't hear that from the Fed. You won't hear that from the Treasury. You won't hear that from Congress, except for maybe Rand Paul's about the only one.
Yeah.
So they could fix this. They don't care. They don't really care that who's getting hurt by the inflation. What they care about is economic growth. America is basically a corporation. That's what it is. It's like one big corporation. And the only thing they care about is their profits. That's it. The C-suite is basically Wall Street and Washington. They're the C-suite of the U.S. corporation. And the only thing they want to do is make money. That's it. And that's where they focus. And they take advantage. The customers is the lower class and the middle class. Those are the customers. They just take advantage of them. Okay, I'm done.
It's a sad situation. So Don, let's transition to some opportunities for investors to navigate, inflationary times, the devaluation of the purchasing power of the dollar, and any type of other, kind of dynamics that pop up that we're trying to navigate and weather those storms. So I was recently reading about Equinox's and Orla's. They combined pretty much, and so curious in your thoughts on that deal.
Yeah, so I really liked it. It makes sense for both sides. So they're both six baggers. At $7,000 gold, I basically have them both priced out. So in my database, I have a percentage upside from the current market cap to their future market cap. And they both print as six baggers. So it was a perfect merger of equals. Neither side got hurt. And not only did neither side get hurt, but both shareholders benefit. Orla, they transitioned to a stronger company. It's much stronger than Orla. Equinox, when they combine these together, this is a much stronger company than Orla, and it has the same upside. And matter of fact, since it's a stronger company, now it probably has 7 or 8 bagger upside, which is a beautiful thing. And then from the other side, Equinox, you got to be really excited because now your free cash flow goes up. And as your free cash flow goes up, it puts you into a position to use the Durrett strategy. So we can talk about the Durrett strategy. So the Durrett strategy is a method of pushing your share price higher. So now they can push their free cash flow multiple, I think it's under 10, pretty sure, yeah, it's under 10, all the way to 25 using the Durrett strategy. And so now, because they have more free cash flow, they're in a better position to utilize the Durrett strategy. So what is the Durrett strategy? Number one, you have a clean balance sheet. So that means no debt and a lot of cash. So that's number one. And I like to have a major of their size, about $2 billion to $5 billion in cash. Okay. And then, okay, so that's number one. Number two, you want to have high free cash flow. And so you got to have, you're basically not spending a lot of money on development, which you can do that through your free cash flow. And you have high margins, you don't have high costs. So right now their ASIC is under 2,000, and Orla is going to lower that. So their ASIC is going to go down to about 1,800, maybe 1,750. So they're going to have a boatload of free cash flow. So that's number two. Number three is that you pay out high dividends of 4% or higher, and you do buybacks. The fourth one is you want to pay out 50% of your free cash flow. Every quarter, 50% of your free cash flow goes back to shareholders in the way of dividends and buybacks. And the fifth one of the Durrett strategy is you tell the market, this is our policy. We're doing these four things. This is our strategy going forward. We're paying out 50%. We're going to keep a high cash. We're not going to have any debt. We're going to pay these high dividends. You tell the market you're going to do it. If you do that for like 3 quarters in a row, your share price will start going up, and you'll do up. Now, I stole this strategy from Kirkland Lake. Nobody's using it right now, but Kirkland Lake uses it. That's where I learned it. But I'm calling it the Durrett strategy. I could call it the Kirkland Lake strategy, but they no longer exist. So I'm just going to steal it and call it the Durrett strategy. Now, Equinox has the ability to use the Durrett strategy to take their free cash flow multiple all the way. Well, why don't I look? Let me check and see what their current multiple is. So their current multiple is 7. They can take this all the way to 25 if they use my strategy. That's 3x expansion multiple. And so I love the deal. I absolutely love the deal. And I think that Equinox, using my strategy, has a really good chance to get to 25. And by the way, I think that this strategy is what most companies are going to end up using. it's kind of a no-brainer at a certain point, because that's the way to push your share price up, is using that strategy. Now, a lot of people will use variations of it. They won't pay the high dividend. Like most of them are paying 1%, and they won't take it to 4%. And then most of them won't use 50% of free cash flow. They'll do 25%. Most of them will do 1% dividend and 25% of the free cash flow. But that's not going to work. It's not going to work. But if you do 50% with 4%, if you do 50% with a 7% dividend, now Lundin, I take it back. Lundin, they just announced that they're going to use the Durrett strategy. I think they're doing 50% of free cash flow at a 7% dividend. So I think Lundin's going to use it. And they didn't, and they're still fairly cheap. So if they do it for like 3 quarters in a row, Lundin will probably get to 18 and then 20 and then 22. They'll start going up.
Yeah. So, Don, just thinking about the some of the other details of this deal. So Equinox's Greenstone and Valentine mines are expected to produce 450,000 ounces of gold. And then now with Orla's Musselwhite mine, that adds another 235,000 ounces of gold. So it's nearly 700,000 ounces of gold coming from Canada alone. And then you have another 115,000 ounces of gold and from the U.S. and then 75,000 from the U.S., 115 from Mexico, and 225,000 ounces of gold from Nicaragua. And so that's about 1.1 million ounces of gold expected to be produced this year. How significant is that?
I just told you, it allows them to use my strategy to push their share price higher. It's significant because, again, if companies use this strategy, they can push their multiple up, and that's what they want to do for shareholders. Just use my strategy and push, and they're well positioned now to do it. Get that debt all paid off, get your debt up, and start paying out that free cash flow. And use that strategy, and boom, here we go.
Yeah. What do you think about the other dynamics? So they also have a near-term path where they can increase production more than 800,000 ounces. They have about 22.7 million of ounces 22.7 million ounces of proven and probable mineral reserves, and then 25.1 of measured and indicated mineral reserves. And so, it just seems like that's a lot of gold.
Yeah, this one is a no-brainer in my opinion. When these companies combine, I said that there's 6-bagger without the combination, and with the combination 7 or 8-bagger. But they have the potential to be a 10-bagger. They really do, because you mentioned that they have a few mines. They have a really good team. This is a really top-notch team, and they're going to grow production. And they have a few. The Los Filos project is still in a possibility. I think they're probably going to be able to pull that one off. They have another one in California they're building. Orla has a couple projects they're building. They have a very good pipeline. Plus, they've shown the Williams to be a shark, so they're probably going to do another acquisition. There's so many quality development projects in Canada that if they go looking, they cherry pick some of these projects. My goodness, this could be a very, very big company. They're currently at 1 million ounces of production. They could take it to 2 to 3 million ounces by cherry picking some of these development projects. One thing they might consider doing, and they might go after some of these bigger projects. There's some really nice ones out there, tier 1 projects they could go after that are very, very cheap right now. So, yeah, I love it. This one we don't need to talk about. It's a no-brainer. I mean, if you don't own Equinox, then you're not paying attention as far as I'm concerned.
Yeah, for sure. I want to get your thoughts on a couple of developers I own. First, let's start off with Dakota Gold. Do you have any thoughts on Dakota Gold? And I mean, obviously, Bob Quartermain, CEO, a lot of past success. They have private land, which means they don't have to go through the feds for certain permits. They can go through the state and such. And yeah, I mean, they acquired the project. I believe it's from VRIC a while ago, and they had a lot of data that was acquired there. And they're looking to get into production here in the next year or two or such. And so, any thoughts on Dakota Gold?
Yeah, it looks pretty solid. I probably should have bought this stock. Mistake on my part. It's currently printed as a 6-bagger on GSD, that's in my wheelhouse. I don't own it. Wish I would have. I made a mistake. I don't get them all. Every once in a while, I miss a few. We crash. It's not on my watch list, but it probably should be. But I own a lot of development plays. But it's definitely a good development story. It's solid. I do like it. But for me, I like to have development plays that are at least 10-baggers. And they're not quite there. They're 6. I like to start at 10 because a lot of things can go wrong. Financing, ramp up, inflation. Things can go wrong in development. So it's not a real juicy development play because it doesn't have the upside. It only prints as a 6-bagger. I prefer 10s. When I go looking for development plays, I usually look for 10s or better. And I can find them. They're easy to find. But this one is a really solid play, so it's not super cheap. That's the only weakness. The only weakness is it's not super cheap. A 6-bagger upside.
Yeah. Okay. Yeah. Appreciate that. So what about Vista Gold over in Australia? I think they need to raise a little over $400 million to finance some of their development and such. Curious on your thoughts on Vista.
Yeah, I bought back in after PDAC. Met them at PDAC and was impressed with their new strategy. I've been telling these guys for the last 3 years, you need to build it. You need to build it. You can't sell it. And so finally they decided to build it. And when I talked to them at PDAC, I talked to the CEO and he said he's going to replace himself with somebody else to build the mine and he's going to stay on the board. And I really like that. So I immediately bought the stock. It prints as a 13-bagger and could even do better than that. So I like Vista Gold a lot. I worry so now that they're building it, somebody's probably, and once they de-risk it and they get close to production, somebody's going to probably come and, make them an offer and they might take it. So now I worry about them getting acquired because my feeling is that the company's always been open to an offer. And if they get a pretty good one, they might take it. But this is a really strong development play that's very cheap. Remember I said it's easy to find 10-baggers. This one's prints as a 13.
So for investors out there that invest in development plays that, the risk of being acquired, what is the risk there? Is it that you don't get as much upside potential if they're acquired? What's your thoughts on that?
Yeah, it depends who buys them. If a major buys them, you're screwed. And if the Chinese come in and pay an all cash deal, you're really screwed because you put your money over there. And you don't want to. You're not there for a 30% return or 50% return. You're there for a 10-bagger, and all you're getting is, I got my 50% return. Now what do I do with the money? And then and if it happens after, and let's say that the gold goes to 5,500, and then they do the deal. You look around and you want to buy something. Everything's pricey. So you want if somebody does acquire them, you want to own that company, or you want it to be a good fit so you don't lose a lot of your upside. But a project like that, a major could easily be interested, and if a major comes in, I call those majors the Elite Eight. And if an Elite Eight goes in and buys them, you don't want to own the Elite Eight, so you're just going to turn around and immediately sell it. So you have the Elite Eight, and then The Elite Eight are the top 8 gold miners, but then you have about 5 marginal majors that they could come in and buy it. Those would be even worse. And then the Chinese could always go and do an all-cash deal. I've had several of those. I don't know if Australia is open for all-cash deals in China, Australia, but I think they are. I don't think it's they're going to stop the Chinese from buying any projects in Australia.
Yeah. Okay, gotcha. So that's the risk there. Okay, so I want to get your thoughts on some of the silver producers. So in a recent pullback, I had sold First Majestic when it was rising up to, between 25 and 30 bucks or something like that. It recently came down to, I think it was 18 or 19 bucks. I decided to buy back in and such. Obviously, they're operating out of Mexico, so there's risk there. And such. So just want to get your thoughts on First Majestic. Do you think it's too expensive at this price level for silver producer?
Before I answer that on First Majestic, I want to go back to Vista and the developers.
Yeah, let's finish that.
You're only, for exploration plays, I think that you only get about 1 out of 10 are big payoffs. So the risk reward, it's not very good with exploration plays. And with developers, I only think it's like 25 out of 100, about 25% of the time. So even developers are not that great. So we talked about Vista. Only about 25% of the time, and even if you pick good ones, are going to have big returns, if you will. And producers are like 50-50. If you pick quality producers in good locations, but you're not going to have as big upside. So First Majestic. So you're going to have about 50-50 shot if silver goes to 200 of hitting your target. And so the target for First Majestic is about $125. So not bad. I think you're looking at about a 5-bagger. 4 to 5 bagger, which isn't bad because you're getting quality, and you want to own quality. And when you get that kind of a risk reward, you got about a 50-50 chance. If silver goes to 200, I think you got about a 50-50 chance, and stays at 200 of getting your return. So not bad. That's not a bad return. It's better than an ETF. Now, you're not going to get it, 7, 8, 10 bagger. You would have if you would have bought it back, if you would have got a good entry. If you're a good investor, you should have bought under 10 bucks, right? Mm-hmm. You should have bought under 10 bucks if you're a good investor. And if you would have bought under 10 bucks, you got a 10 bagger. Now it's at 20, you're getting a 5 bagger. So you got to think about it that way. Now there still are a lot of companies that print as 10 baggers, producers, but they don't have the quality that First Majestic has. It's not, you don't really have the 50-50. You get the 50-50 if it's quality, right? So it's hard to find 10 plus bagger producers, especially today after we've ran a ways. There are a few of them out there. Believe it or not, probably the most asymmetrical one out there right now, it's not quite a 10 bagger, but it's kind of in that ballpark, is Coeur Mining. Coeur Mining is trading at a 6 multiple, which is ridiculous. First Majestic is above 10, but Coeur's trading at a 6, and I think it could go all the way to 30. I do. Yep. I think Coeur could go all the way to a 30 multiple. So that's a 5x expansion. And then you got the silver price to go with it. So I think Coeur actually has 10 bagger in it. I think it really does. And so with that one there is probably the most asymmetrical bet out there, because the downside for Coeur is probably 15.50, somewhere around there. I don't think it's going to go all the way to 15. 15.50 to 16.50 is like the bottom, and the top is like 150. So you talk about an asymmetrical play. Coeur is unbelievably asymmetrical. The other one that's asymmetrical is Endeavour Silver, but the problem, Endeavour has to build a mine. They have to build the Pitarilla mine. Coeur doesn't have to do anything. All they have to do is sit back and let the price of silver and gold go higher. That's a really sweet asymmetrical risk-reward bet.
Yeah. Yeah, for sure. So just looking at, I'm curious in your thoughts on Vizsla Silver. I know Vizsla Silver sold off. They were in the process of developing their mine and such, and they had the issues in Mexico. Do you still see opportunity there?
Oh, do I ever? This is either the best silver development play or the second best silver development play. Well, now we have two in Canada. So these were the two top ones. The first one I think is Discovery Silver with their Cordero project, because it's basically 1 billion ounces. But then you have Panuco, which is Vizsla's, which is absolute thing of beauty. I mean, it has low capex, low ASIC, high free cash flow. I mean, it might be better than Cordero. Those are kind of my top two plays. And there's some risk here. Everybody's kind of sold it. I bought 2 dips. So when it crashed, I think it was over $10. It crashed all the way to $4. And I bought there on the first crash because my feeling is that this mine's going to get built. And then it crashed. I bought again at $3.25. I don't think it got to $3, but I bought the dip twice on this stock. I feel confident that this mine will get built because the free cash flow is over $1 billion a year. $1 billion. That is way too much money to not happen, if you will. It's one of the biggest silver mines in the world. Large silver mines are rare. They are super rare. They're almost like unicorns. And this one is easy to build. I mean, the market cap is like $250 million to mine 20 million ounces a year, which is it's so economic. It's just ridiculously economic. The upside in the free cash flow, like I said, is like over $1 billion. And as silver prices go higher, you're looking at 1.5, maybe even 2 billion in free cash flow. So put a multiple on it and put a value. So I actually love the project. I expect them to build it. Heck, they might get their permit this year. They've submitted it. They might get a permit this year. Can you imagine if they got their permit? I mean, this stock it's bouncing on the bottom. It's bouncing on the bottom. I don't know. After today, it's probably down to 350 again. Let me take a look. I mean, it's pretty cheap. I like the risk reward, trading at $3.50. This company, I mean, people basically haven't bought it. I mean, this thing got crushed when they had that cartel issue and nobody's bought it. Everybody's, I'm not touching that thing, and nobody's touched it. And it's basically bouncing down there on the bottom. And they might get a permit this year, which is crazy. I mean, can you imagine if they got their permit? I mean, you talk about a stock with some upward leverage. I mean, it's not crazy talk to think this stock could go to $10 by the end of the year.
Yeah. Yeah, that's some exciting news. I mean, hearing from you, because I know that was a big dark cloud over this company.
For me, the only red flag is they sell the project. That's the only red flag. They might say this is too messy for us. You do it. You know, that to me is the only red flag. I just hope that I own whoever buys it. But my gut feeling is that they want to build it. They want to build it. They don't want to give this away. It's got way too much leverage. So if they sold this thing, they'd be giving it away. Here you go. Unless they did a merger of equals with somebody. They did a merger like with Hecla and say, oh, Hecla's not in Mexico. Did a merger with maybe Coeur, but the problem is you're still giving, your shareholders are going to absolutely get rug pulled here because if you look at the upside potential of Coeur versus the upside of Vizsla, Vizsla is way higher. So you're rug pulling your shareholders. So the only good outcome here for the shareholders, they build a mine. That's really the only good outcome, and they have to know that. So, and I like Craig Perry, the chairman. I think he knows what he's doing, and I think he's going to try to maximize this thing. And I know he's got to be a shareholder. So, fingers crossed they build it. But I'm just crossing my fingers they get their permit this year. If they do, it's like that is going to be a really juicy stock.
Yeah. I definitely could see. I mean, it's been sold off. It's been beaten up. Many people thought it was left for dead. It's been just bouncing at the bottom. I'm actually looking at it now on the chart, and I mean, I don't know how much this plays into a development play, but even under the 200 moving average, it's trading under that. But it's just been like it's building a base, you know. So, I mean, I think this is there's risk, but it's definitely an opportunity. Yeah.
I haven't told you. Let me 1 second before we leave off Vizsla. I'm just gonna run my tool on it. Let's do this. Do I have the ability to share my screen?
Yeah. Let me.
All right. So this is Vizsla, and this is my website. So if we take a look at it, so it's currently 1.2 billion, 25% insiders, trading at 350. They're loaded with cash. It says 254 debt. Must have borrowed some money to build it. So they have 360 million ounces, which is a lot, and it's 400 grams, and it's just gold and silver. So it's a very large, high-grade mine. I have them mining an average of 18 million ounces. The ASIC is $11, so I'm using 14.
Wow.
And they're going to mine 20 million ounces the first 3 years. Now, the reason I wanted to share my screen is my tool. So here's my tool. And now they've already borrowed a bunch of money, so they probably should not going to have to borrow a lot more. So I'm just going to add, it's at 350, so the I don't know, 20 million. I'll add 30 million shares. And I'm going to take it's in Mexico. I'm using a 16 multiple, which in Mexico, they might not get a full, I'm going to take it to 18. Well, yeah, I'll take it to 18. They currently have, this is 18 million ounces, $200 silver. They're currently, ASIC is supposed to be 11, so let's say it goes to 15. So we'll take this up to 30. Actually, we'll make it 32. And we'll run the calculate button. It has a price target of $137.
Wow.
Yep. Now, if we take it down to a 15 multiple, and we take their cost up to 35, so that'd be an ASIC of about $20. I think that's easily done. So first we got aggressive. We got to about over 35, and now this is a conservative number, $112.
What if you did 150 spot price silver?
Sure, I can do that. $78.
Yeah, you're still looking at it. No matter how you slice and dice it, the math is incredible on this.
Yep. Am I back?
They may have gotten one of your gems. They may have gotten one of your secret gems, Don.
Oh, I told you, I've been buying the dip twice on this thing. I mean, this thing's got some serious risk reward upside. If they build a mine, oh my goodness. I mean, yeah. It has got some serious leverage. Again, they're going to mine 20 million ounces the first 3 years. the free cash flow is going to be off the charts. Off the charts.
Yeah, that's wild. Okay, so Don, how can people access these tools that you have? I mean, those are incredible. I liked how you were just able to input the numbers and it does the math for you.
Yeah,
how can people access?
Yeah, I love that tool. I
Yeah.
built it last summer. So in my website, it gives you an upside number, and I wanted ability to modify the numbers so I could have scenarios. So I designed that tool, it works great. Grok told me that Grok said, "I'm jealous of your tool." Sure, Grok my tool. I'm jealous. That's a nice tool. It's a really, really useful tool. You can have all these scenarios, what the costs are going to be, what the shares are going to be, what the gold price is going to be, and see the range. You can get a range of what this company is going to be worth. And you can get a low end and a high end, and it's a beautiful thing. I love that tool. The tool alone's worth worth admission to my website. So my website is for people that already own gold and silver mining stocks. It's a very useful website if you already own them and you want to. First of all, you can see what I have to say, how I rate your companies. Then you can look at all the other stocks. 870 gold and silver miners in my database. So they're all there. Powerful search engine. You can look for anything you want to look for. And the forum has become fantastic. Today somebody said we're spoiled. So I have 3,400 subscribers. So my forum is just loaded with people in there posting. So any news that happens gets posted. So it becomes a fantastic. I mean, when I created my website, one of the things I wanted to accomplish two things. Number one, I wanted to have a powerful search engine so you could find whatever you wanted to find. And number two, I wanted to have a really good forum where you could find news. And I accomplished both of those. And so if you don't own any gold and silver miners, but it sounds intriguing when you can get that kind of upside from Vizsla, read my book. So go to Amazon, enter my name, Don Durrett, and put gold next to it. And my gold book will show up. And read my book. And then after you read my book, you'll know how to analyze gold and silver mining stocks, and you might be intrigued to get involved. But Darrell, thanks for having me on. It's always been a pleasure. Enjoyed it. Enjoy your Friday.
Yes, indeed. You too. And that's your gold and silver book. It's a great book. I'm actually I'm about halfway through it. So
you're not even to the good part yet. The second half's the best.
I need to go ahead and wrap it up, Don.
Oh yeah, second half of the book's fantastic. It's all about how to analyze the miners.
Yeah, for sure. So I appreciate that. You all be sure to go to goldstockdata.com, check out Don's tools and everything that he has. Also hit the subscribe button. Love to have your support. And thank you all for watching, and thank you, Don, for your time.
Awesome. Thanks.